As can be seen in the Dow, after it hit the top area of the trend channel, it had the potential of coming back down to the bottom area of the trend channel. There was a few days in there where it might act as support, but any bullish signal was not confirmed, and today was more the same. They were taking it down, so we're still looking for it to try to bottom out in this area. That's the first support level is on this little trend line. Second support level is here at the 200-day, which would coincide with this bottom. We're in the oversold area, but we haven't seen any buy signals yet. Now, what might not be unusual is to see them take it down to the support level and then bring it back up by the end of the day doing a hammer type signal. And notice how far away you're now moving away from the T-line. This could be where you start watching for a reversal. However, the NASDAQ is a different story. The NASDAQ closed again below the T-line, second time in a few days. However, notice where it opened today. It opened at the lower end of the trading range, or at the open of Friday that moved bullish, and gapped down and tried to trade back up, was still trading lower at the end of the day. This makes for a little shooting star doji type day, which makes the analysis very simple. If they open a positive, that's a good signal. If they trade or open it below today's low, that means we're in for a bearish flutter kicker, which is a kicker signal telling us that they've given up the ghost, that they're going to start taking this market down. Now, they may take it down to the 50, but that's going to imply that we're going to have 2, 3, 4 days at least of downward trading. And the S&P 500 has the same scenario. Notice how it keeps failing right here at the T-line. We're starting to get a T-line crunch, which is pushing the market down through the 50. Once again, if they open the market slower tomorrow, that's probably a good indication that we're now in a bearish kicker or flutter kicker signal, which means they could be bringing the S&P 500 down to this level, or the lower end of a trend channel. That would imply that if we wake up in the morning and see lower pre-market futures, you probably want to close out any long positions that are still acting or starting to show some weakness. This also means short positions like DXM continue to stay short, or if you covered short positions on positive trading today, get ready to re-short this one, because if we're coming out of wave 1, wave 2, wave 3 has much more downside. Or scenarios like T or FLTX, another one of our short recommendations, still has the potential target of the 200-day moving average. So these would still be considered short because they have not been able to close back up above the T-line. They still haven't shown any buying. The downtrend is still heading for support levels. And the nice thing about candlestick analysis is that you can start identifying when a trend is starting to get weak. For example, in our recommendation on TSL, coming up out of this little J-hook pattern, now we're either moving sideways, ready for the next uptrend, or we're ready to start rolling over. So a very logical spot, which is the benefit of candlestick analysis, is you can identify where it would logically tell you the bears are in control after some sell signals and the bulls are out of the picture. In this case, today's open would tell us if they could move this back down below today's open, we want to take profits and get out of the position, because that means the price is now starting to roll over and the bears are in control. That'll be it. We'll see you in the chat rooms.